All right, guys, so let's get right into it. What I'm going to be doing is I'm going to be breaking down the next $6 index pairs for the next 24 to 72 hours to give us indications and outlooks of where price could potentially move, as well as factoring in potential risk-exposed environments from the bullish and bearish stance. So with that, let's get right into it. One thing to factor in on the monthly time frame is that we are pulling off of that 115, 116 handle, which makes complete sense because that was a 3-year resistance, which is now acting as strong dynamic support. One thing to factor in that we did state is last week did give key indications of that potential bullish movements for this week. And so with that, we do want to be quite careful on how big of a push it's going to be making from that from this previous base. And so looking at it from a daily time frame as of right now, we can see that structure is potentially going to create higher highs if it does in fact break above that 117.50 handle. One thing to factor in is that there are two trends within here. You have that first one being that descending, then from there you do have that second one due to that was the relief capping off that trend, and now we are in the second phase. Hence, if we do in fact break this high, creating short-term higher highs plus a small-term pullback, we could expect one rally back to that previous high slash lower high that descending form did fact. And then from there, this would be treated as correctional relief, in which if we did break out, we could expect a rally all the way back to the downside. Or if we did break back above, we could expect another bullish rally to that 122 to 123 handle, creating a structural retest or potentially even rallying all the way back to that descending trend line. But looking at it from a 4-hour time frame perspective, we can see right now that we are in just a state of relief. And so it's very simplistic on two ways that we're going to go about. Two things that you do want to mark real quick is that you do have this previous zone sitting here, as well as you do have this previous high sitting here that is holding that first initial impulse down. And then from there, you do have this last high with the rejections. And so I'm going to take that away just for clarity. And so right now, if we do break above, we could expect a small pullback, and then from there you could expect a rally back into this previous zone. Now, if we do start to continue to the upside, we're going to expect an impulse up, from there a pullback, and then from there we could expect continuation all the way back to the 120 handle. Once again, guys, you would be treating this as correctional relief or liquidation, simply for the fact that this was the initial impulse to the downside, in which if this does start to break, creating lower lows plus a small pullback, we could expect continuation all the way back down to the monthly support. Now, if that doesn't happen and it doesn't break out, we do in fact want to see that being capped. We're going to want to see a strong impulse below the monthly support, the 116.62, a nice pullback, and then from there we could expect a drop all the way back down to the daily support of the 115.10, creating this a 1-2-3 pattern, the 1 being the impulse, the 2 being the relief, and that 3 being continuation, with hopefully breaking that low and seeing continuation down below the 115 handle. Failure to do either will just warrant consolidation. That is not something you are interested in. Please keep in mind that the big bullish plays will not be seen until you do in fact break that 120 handle, followed by a strong pullback, and then from there you could expect one more rally above. Failure to do either will just warrant consolidation. Bringing it to the next pair, USD CAD. On the monthly time frame, you do want to factor in a couple of things real quick. This is its behavior to start off with an impulse, followed by a relief or liquidation with another impulse, and then now we are in that liquidation phase as of right now. So looking at it from the weekly time frame, it is quite expected why we are seeing all of those rejections at that 128 to 130 handle, simply for the fact that you can see when that low did break, the bulls did in fact hold that for quite some time, in which the bears now took over. You can see in the past that there were a lot of rejections and a lot of false breaks, in which we can see now that structure is in fact doing the same thing that it did in the past. One thing to factor in is that CAD economics do want further appreciation on their currency, but since the rise in dollar occurred in the past coming weeks, that did cause a lot of consolidation within the pair. Now, looking at it right now, we are in a very complex place in the smaller time frames, but looking at it from a daily perspective, there's really two simple ways. You either break the lows here with a strong enough impulse, followed by a nice pullback, and you might get continuation back down to that ascending trend line that's being found on the weekly, and your goal is to hopefully break through that and target all the way below the monthly support, simply for the fact that that is the behavior of the longer time frames. Now, failure to do that potentially could warrant a strong enough impulse above the monthly resistance, followed by some type of pullback or liquidation, or further continuation back to the weekly resistance. Now, that is a very simplistic approach, simply for the fact that we are warranting this as range bound as of right now in USD CAD, in which it's either going to see continuation of that impulse, or we're going to treat this impulse and this ascending movement as liquidation for another continuation back to the downside. Now, in the smaller time frames, it does become a bit more complex, guys, simply for the fact that you can see that we do have a short-term ascending trend within this entire liquidation phase, right? And so looking at it, it's not ideal if you want to be taking trades below this low, because it is going to be warranted short term or higher risk because the momentum is ascending. And so ideally you want to see breaks below that lows for any type of trades back to the downside. You want to see a strong impulse followed by a pullback. And then from there, you could expect continuation back down. Now, if you don't get that, and this simply just stays like this, if this breaks to the upside on the highs, look for a small pullback, and then from there, you could ride that back up. Just remember, you are dealing with monthly resistance in which false breaks can come about. Clear signs, guys, are below the weekly support and above the monthly resistance. Failure to do either will just warrant the same continuous behavior, which is whipsaw, stop hunts, and things of that nature. Looking at a UJ on the monthly time frame, we can see that we are seeing short-term bullish momentum occurring, but we are warranting this entire movement as a structural retest, and this impulse is invalid after this impulse was occurred until the beginning of 2018, in which this small-term ascending movement is treated as liquidation. Looking at it from the weekly time frame, guys, we can see that that was the initial impulse that was made, breaking these lows in 2018, treating this short-term ascending movement as liquidation or profit taking. One thing to mark is that this is the last low of this ascending movement, in which if we do crack strong enough, followed by a continuation pattern, we could see potential continuations back down to the monthly support, the 105.50. Now, the only buy would be warranted if we broke above the 111.22, in which it would be short term to the 113 and 114. Now, pulling it to the daily time frame, guys, you do want to look at a couple of things. We do have an impulse here. We do have this relief that broke out, structural retest of that previous bullish support or dynamic support, in which now notice what we have here. We do have a false break of the monthly resistance, seeing right there, and B, we do have this impulse warranting this as liquidation or relief, in which if we do break out, creating short-term lower lows, from there we could expect continuations back to the low, creating a potential head and shoulders pattern, which you can see the left there, the head here, the right here, and this being the neckline. If you do see a small crack, a big enough crack below the neckline, followed by a small term pullback, you could expect continuations all the way down to the monthly support. Now, failure to do either, you would need to see a break above here. From there, a small retest, and you could expect continuations back to the upside around that 111.24. One thing to factor in real quick on UJ is that it did break and retest right now on the daily time frame, in which we could see a completion of this inverted head and shoulders pattern if this does in fact break out, in which if it does do that, we should see continuations back to the upside. Now, if it does get capped out here, creating another false break, you want to see that low get broken. From there, a small continuation pattern, look to run that all the way back down to the previous lows. Failure to do either will just warrant consolidation. One thing to factor in is this does break out, make a small continuation pattern, start to rally up here, just targeting that previous low, creating a structural retest, only for the fact that you'd be treating this entire ascending movement as liquidation and correctional relief for another continuation all the way back to the downside. The only way that you're going to see really strong bullish pushes is if we start breaking above that weekly resistance. Looking at pound dollar from the monthly time frame, you can first see its behavior, which starts as an impulse, then from there relief, and then we will see continuations of that impulse, and now we are in a state of liquidation. Now, if you do look at it from a more minuscule perspective, you can see within this ascending movement, we did just break the low, creating lower lows, hence momentum is now continuing in its current direction, which is bearish. Now, one thing to factor in is that this movement was quite impulsive, so some type of liquidation was to come about. The amount of liquidation that we're going to get is just going to be dependent on how hard the bulls can push. Now, one thing to factor is that there is this potential head and shoulders pattern coming about with that 132, 83 being the neckline. Now, one thing to factor in from the daily time frame is this bullish push is going to warrant how big of a correctional relief we're going to be. And one thing to factor in is that there are two trends being formed here. That initial one gets capped off here, with that being consolidation, and then you see the second one here. Hence, this was the last high / low, so we do in fact need to see, and if you didn't get entries within here, you're going to want to see another break above that previous low / high. Small continuation, you could look to run that back to the tops. Now, that this is all treated as correctional relief, simply for the fact that you could expect another downside play. Now, one thing you are expecting is a strong impulse up for any continued bullish momentum pullback, and once again, you're going to be battling with A, though, B, and so you want to be quite careful with that. In reality, any real bullish movements are going to be back above this previous monthly resistance, sitting at 135.7, 137.568. Now, one thing to factor is that if we do reject and we do start to break out, you are looking for short-term lower lows. You're looking around that straight to the downside. Looking at it from the 4-hour time frame perspective, you guys can see here that Right now, pound dollar is showing further continuation to the upside, simply creating structural retest on that previous high slash low that it broke. Once again, that is the impulse. This is correctional relief. So if it does in fact break these highs, you could expect potentially pushes all the way here, but that's going to form a reversal pattern. So if that starts to break out, that could be your potential sell, right? So if this does start to just continue, you could sell that, run that back to the downside short term again. Then from there, you could expect potential pending orders as you look left. And so this is going to be a dicey area to battle. You want to ideally see a clear break above, a small continuation, and run that back to the upside. Now, failure to do either, and if we start to warrant these as false breaks, what we're ideally going to want to see is a strong impulse to the downside, some type of pullback, and wherever it starts to create lower lows, again, start running into the downside, being this A1, A2, and A3 pattern, hopefully breaking the lows. Looking at AUD USD to start, we can see here that it is failing to break that monthly support, which actually turned to monthly resistance, but potentially could be warranted as false breaks. Once again, guys, a trend is not a straight line shot, but a consistence of highs and lows. Even though we broke that trend, we never in fact broke that low indefinitely, hence potentially warranting a false break. Looking at it from the weekly time frame, we can see that there were a lot of wick rejections here, in which once that the rejections start to hint deceleration exhaustion, we did see a bullish movement, and same thing is occurring as of right now. And so with that, since we did not create lower lows, you do still want to factor in that you are in a state of correctional relief because of that initial impulse. This is being treated as relief, and so it doesn't matter that this might pull back because the momentum is still to the downside. The only way is if we broke above that 7784. And then from there, you would just target the tops. Once again, all treated as short term simply for the fact that the entirety of the movement is downside, capped at the tops near here, with that being the ascending trend. But shorter time frame perspective does tell us that we should continue to the upside for a bit of time. It's a bit of a dicey situation right now because you are descending first, but you did break this high, creating short-term higher highs, completing that inverted head and shoulders pattern, things of that nature. We are on a small pullback, so ideally you don't want to take the trade within here. You want to wait for the break of that descending trend line, small pullback, and then try to run it back to the weekly resistance. And then from there, give yourself a chance because this is all treated as liquidation again because of that initial impulse. Just mark the previous highs that warranted as lower highs in that descending trend. Looking at it from the 4-hour time frame, you guys do have a potential opportunity to take this trade if it does break out. But like I said, going to be warranted as short term, could create a double top and start crashing down if that starts to break out and that low right there. Now, if that does happen, that would be your sell bias right there, in which you just are waiting for that low to get broken, small pullback, and then start running it back to the trend. If that doesn't happen, guys, you might just be consolidated or range bound, and that might be something that you guys are interested in. And last but not least, looking at it, New Zealand dollar on the monthly time frame, same thing as AU. You do see that initial impulse to the downside. We are in a state of liquidation, even though we broke out of that ascending trend. That low never got broken, in which you do want to factor that in. That is the descending movement that caused this consolidation right here. And so longer time frame perspective, it's the bears game, but shorter time frame could be the bulls right now. So looking at from the weekly time frame, you are range bound. Once again, here's a clearer picture for you guys. And so as of right now, guys, you do want to see what's going to happen within here. We did just state in the webinar previously that it took exactly 4 candles from the low before the big impulses. And so we did just see 4 candles right here occur. And so if this starts to take off back to this previous low that got broken, creating a structural retest, we will not be surprised why. Please take into consideration that this is in range bound after that initial impulse, in which any bullish movements to the upside, if we break out of the range, will be warranted short term. Treat it as relief because that could break back to the downside. But let's take a closer look at the 4-hour time frame to see where we could potentially move to. So as of right now, guys, we can see the end use formation and behavior after we broke that high. It starts with an impulse, followed by a pullback, another impulse, and then another pullback or relief. So what we want to see is an impulse above that daily and that consolidation. From there, we are going to want to see some type of liquidation, relief, and things like that. And then from there, if that does break out, you could expect a rally back to the weekly resistance. Once again, you would be creating a structural retest of that previous low, hence potentially incurring some selling orders or pending orders from the bear side, treating this whole movement as correctional relief simply for the fact that that could start to decelerate and start to leg back to the downside. Now, if that doesn't happen, then from there, you ideally are looking for this to pull back, potentially create a short-term flag. You could sell within there, but remember that's creating a head and shoulders pattern, so I'd wait for the low to break, some type of pullback, and that would be my sell, right? And then from there, I would try to run it back to the downside, hence creating this A1, this being the 2. And then this continuation would be the 3, back to the one and potentially breaking that one, warranting further continuation to the downside. And so with that, guys, that's the breakdown of all the dollar pairs for the next 24 to 72 hours. I hope you guys enjoyed that. And now we're going to be getting into the questions and answers.